Okay, very good morning. It is Thursday the 12th of April. I hope everyone is well. I'm going to give you a quick overview of some of the fundamentals at the moment. Obviously, major focus being on the Syrian situation and some of the respective price movement we had yesterday, and then backed by popular demand, Mr. Sam North will then jump on, fresh haircut in tow, and he's going to take you through some of the technical levels as well for today. So I'm going to keep it with the news side of things, and certainly last 24 hours has been very interesting. And I don't know about you, but you know, when the markets are like they were yesterday and the news flow is really picking up, I just find it, you know, your heightened sense of awareness and engagement and ability to perform, I think, is heightened in that type of situation. You just feel more alert and your brain just starts to function. I don't know if that's the same case for everyone or just me, but I certainly feel it's actually easier to read the market, and consequently I did see a couple of you guys had some really good trades yesterday when things are really moving at a pace. But before we get on to the Syrian situation, just want to have a quick review of the FOMC minutes, which of course came out last night. So one of the things here, just to show you in the charts here in the top left hand corner, I have, well, I'm just going to isolate in the price charts here, or the movement here. So we got Eurodollar on the left, cable beside it, and as you can see, both major pairs saw a minor downward movement last night on the release of the FOMC minutes. So as such, dollar strength, the overall perception was that these minutes last night from the Fed were slightly on the hawkish side. So just to give you a bit of a flavour, traders were noting the central bank was more confident in the medium-term trajectory for inflation. They also said on the growth front, the Q1 growth weakness is seen as transitory, so i.e. once it's gone through that period, it should revert back. And several participants expressed the judgment that it would likely become appropriate at some point for the committee to set the federal funds rate above its longer-run normal value for a time. So certainly a bit of a pickup in that sense in their confidence over the inflation situation. We have seen that, of course, play out in the economic data from yesterday as well, with the US CPI numbers, the core reading, picking up to the highest levels it's been in some time. I think it was 2.1%, if I remember rightly. However, just having a look on what Bloomberg are running this morning, they are looking at a few other points, and the headline they're running is the Fed sees GDP hit from trade war outweighing fleeting inflation. This is certainly a bit of a different spin, and they're looking at the more, I guess, dovish side of the argument, and it was talking about the fact that the ongoing or the renewed tensions that are emerging on the trade front could have a material impact on increasing the downside risk to growth of the US economy. So I would say that was definitely part of the equation, but overall it was deemed in the wake of the release last night to be a little bit more on the hawkish side because of specific commentary regarding inflation. However, the important thing to note here is this morning when you've come into the market, are you trading the FOMC minutes? Absolutely not. The actual move in itself did occur, and as you can see, there definitely was a move in Eurodollar of a decent 30 pips at the time. However, look where we are now and the price movement from overnight. These minutes are old, and at this current point in time, people, investors, speculators in the short-term intraday market, they're more concerned about the geopolitical front than they are about some historical backdated Fed minutes at this point. That's not saying that the Fed aren't important, but the kind of blocks of individual isolated kind of news-driven events, they've moved the dominoes, and actually the most dominant theme now for sure is the situation around Syria, and certainly that's what played out yesterday. Then you've probably got the trade situation, then the Fed underneath there, if I was going to put it in the hierarchy of kind of global macro themes. Looking at yesterday's move, obviously Donald Trump kind of got the wheels in motion. What I find quite incredible is that Trump weighs strike options on Syria as allies rally over the attack. the article here on Bloomberg basically suggesting that Donald Trump is still weighing up options for US military action. Not sure about you, but I thought his first tweet said, "The missiles are coming." Seems like he's jumped the gun a little bit there because he hasn't even decided what he's going to do yet. But as we were discussing, this is kind of, tactic 101 of the US administration. You go in incredibly aggressive in order to kind of really show a hand, or a forceful hand to the situation, which politically, domestically is received quite well by the American people. Whether or not it ends up getting to that point is yet to be seen, and certainly this is something we're looking out for today, because you've had the likes of Theresa May come out, the UK Prime Minister, last night, saying that she is holding an emergency cabinet meeting, I believe it's happening later on this afternoon, about whether or not to back a strategic kind of strike on Syria. In addition to their allies like France have called for the same, and of course Donald Trump himself. So at this point, the White House hasn't decided yet on how to retaliate. But certainly yesterday what we were hearing was that part of a scheduled plan of maneuvers of US military personnel in the eastern part of the Mediterranean was happening. So kind of everything's in place. It's just down to what happens next and whether diplomacy can win out in this type of situation or not. Quite an interesting thing I was reading, and what I'll try to do today if I have time, I want to put together a short sequence of lecture slides to really explain why Syria, why is it important, what's the background, what's the conflict with Turkey, why is Russia interested, why is America there, all these different questions I'll look to try and put together an answer for you. So hopefully I can get that done at some point today. But one thing I was reading last night was quite interesting, is that Syria have what's called, I think it's the S-400 missile interception system, which basically borders around the country and is bankrolled by you-know-who, Mr. Putin. And how much does Mr. Putin make on each one of these specific, I think it's, if I remember right, it's a 6-launcher suite of missile capability, which comes with its own command team, and it costs you a cool $400 million per one unit. Now, I would imagine you need multiple units in order to safeguard an entire border, if you like. And so who are the Russians selling this to? Well, if you're going to sell a product, you need a proof of concept. So they've installed it on Syria, and apparently I think it can intercept something like 80 missiles simultaneously if fired at the country, is what the technology would suggest. Who else are the Russians selling this to? Iran, for one, and then also Turkey as well. So it's quite interesting, all these different things that are going on in the background. And as I say, I'll look to get some more details to make everything hopefully crystal clear from a political perspective a bit later on. Going back to trading though, things are relatively calm at the moment because I think people are still trying to make a judgment of where do we go from here. I guess the next market sensitive point will come with, really, is the likes of the UK and other European allies going to back America in having a strike on Syria, and then when is that strike going to happen, if it is indeed going to happen. So that's probably the things I'll be looking out for. But one thing is, the Syrian strike that was conducted by Trump about a year ago, it happened very quickly. The Americans kind of just went in straight away. That hasn't happened this time. And so it's quite interesting. Just this morning, I'm just looking at the oil chart here, and it is just edging a little lower. I just wonder if a little bit of that kind of war premium, if you like, is just coming out the price a little bit, because we saw a really obviously dramatic move yesterday. Talking of oil, let's just have a quick look. And this is what I was kind of making the point of when we had the oil inventories yesterday, was that who cares about the oil inventories? When the news was coming like it was yesterday, all the market did yesterday was, it looked like we were already going bid as the headlines were coming out, and Donald Trump was kind of flip-flopping between being fairly even-handed to then calling everyone animals. The price was rallying, and then the price action kind of died down quite a bit, and quite rightly so. I think participants then possibly would have come out the market or lightened positions, wait for the oil inventories to come out just in case you got a really bearish surprise which counteracts the trend that was materializing. That didn't really happen, and even irrespective of US output getting up to 10.525 million, which was up over 0.6%, the market didn't care, and actually we reverted back to what is the more pressing point in the short term for the energy markets, which is this escalation in the geopolitics. And so then we just, after the numbers, we had a really fleeting move to the downside, and then we rallied really aggressively. Not only did we rally, we broke a very key level on the upside, which we were watching yesterday. Was this kind of 2018 double top, which dates us all the way back to 2014. So oil trading at the highest levels since late 2014 at these current prices at the moment. Kind of has been coming off though a little bit this morning, and that pivot level, I know Sam's going to talk about this, the pivot level here you can see at 66.45 could be interesting just because it marries up with that high that we had there just circled from yesterday around midday when those first comments were coming out prior to the infantry move that we saw, or post infantry move that we saw. Alright, a few other things to look at then on the back of this. This is the Russian ruble. Thought I'd quickly have a look, and the ruble is strengthening this morning, not weakening. It's not continuing to weaken. As you can see, dollar ruble over the last few days has really soared to the upside. We've gone from, let's not say this is a small move, let's put it in perspective. We were trading 58 on the 6th, we got all the way up to 65. Yeah, that's a pretty punchy move. However, where we are this morning, the ruble's clawing back some of its recent losses. So dollar ruble here is just pairing some of that move that we saw. One of the other things we were talking about yesterday and is getting picked up this morning is the metals market has also been seeing some pretty interesting moves. Aluminium probably the standout as prices climbed 10% in 3 days. Aluminium's just put in its best rally since 1990. Now, why is this happening? Not so much to do with production, I guess, more supply, because what's happening is that the Russian firm Rusal is under threat about the implications of US sanctions, and that Russian company is the world's biggest producer outside of China. And so what's happening now, reading the comments this morning, the Russian government are having to step in and prop up the firm because of its heavy debt levels that already have affected the firm more recently as well. But what that means then, if you've got one of these biggest producers having issues, then the price of aluminium's got to go up because supply is going to be impacted. But yeah, this is just a wrap then of the day, so you've already got this in your inbox. But the main thing is, I'd say the market is still at the moment caught up in a lot of the headlines that were driving sentiment yesterday. I think we're still at that same point. Talking about the Fed, I don't think is really a meaningful debate for today's session. I think the geopolitics is going to remain the prominent theme, and I guess, as I said, the bits where I'm looking for potential market activity to come from is, do the likes of the UK, does Theresa May action the authority to go ahead and support the US in regards to strike on Syria, and then when's that going to happen? And then also, of course, keeping an eye out for commentary from the Russian Foreign Ministry to see whether or not they kind of de-escalate the situation with more calming words, or quite the opposite. They were fairly diplomatic to start with yesterday, but it seemed like the more Trump started tweeting, the more it was annoying them to some extent. Alright, quick look at the calendar and I'll hand you over to Sam. A few things to be aware of. This morning is relatively quiet. You have got industrial production, which I don't think you really need to be too concerned about if you're trading European assets. but I definitely would be keeping half an ear on the ECB release of their minutes from the March meeting. If you remember, more recently, 2 days ago, we had some incredibly hawkish comments from Evel Novotny, and even though later on in that afternoon session it became apparent that these were his own opinions and not that reflective of the broader governing council, I would say keeping an eye on the minutes for then this idea about their feelings on inflation, about economic growth in the euro area, and about consequently then their forward planning for normalization of their policy, i.e. potentially, like we heard, lifting the deposit rate, timings around these things, and also winding up the QE program. So the ECB minutes definitely would watch out for. That's at 12:30 this afternoon. Your regular jobless claims from the US, but pretty quiet on the US economic data front. As I've said before, in terms of what continent is driving short-term sentiment, it's North America. I think you definitely saw that yesterday. Remember, we were talking at this time on Wednesday morning about how to allocate your energy and your capital towards specific points in the day if you're going to act and perform at your most optimum state. You cannot remain fully focused for 12 hours a day. You've got to pick and choose your moments, and I would say still at this point you want to be thinking and gearing your mindset towards the US afternoon. As a reminder, Donald Trump, going off my statistics on my Excel spreadsheet, the guy on average likes to start tweeting at around 11:47 AM London time. So yesterday the tweets that he made, the ones that moved the market about Russia, they came shortly after midday, so I would definitely be keeping your wits about you about that specific point of the day as well. Other speakers to be aware of, couple, ECB's Weidmann, but not until 5 PM this evening, and the rest aren't actually until the evening, so it's going to be after most of you guys have gone. Alright, let me hand you over to Sam then, and he can talk over some of the levels, but I wish you a good day. Thank you.
Yeah, good morning guys. Just going to have a quick look over the currencies to begin with. We'll start off here with Euro. Just put this on to 60 minutes. So yesterday we did get up to the highest we've been for quite some time. I think still looking, I would say, to continue this recent trend, or favouring to the upside. I would go with for now. I think yesterday's low point with S1 looks quite nice with the sort of that double support. Let me just get a horizontal area around here. It looks quite nice. I think if we break above the high of the day, I'd prefer to wait for a pullback to the area to then look to get in. You could probably have a trend line going from the high of yesterday down to today's highs as well. So let's just have a look at that. But yeah, I think if we can break through the 124.38 on the futures and then start to look to get up to R1 and yesterday's high, which you would imagine would be quite a nice area of resistance on that first test. So for the Euro, I think those would be the areas that I'm looking to get at today. If we were to continue to push on, and since really the 6th, so 1, 2, 3, 4 and possibly 5 trading days today, you can see each of those lows getting higher. So trying to continue this uptrend and push above yesterday's high in R1 might be the favoured trade later on to be focusing on. Similar for the pound in that we've been pushing higher, and each of those lows also getting higher. Let me just mark up. I think around the R1 today is going to be quite tricky. So for the safest sort of trade, you would want that whole area really to break and then perhaps look for a retracement down to continue. Looking at yesterday's lows, S1, and then the low that we had back on the Tuesday afternoon, I think is an interesting area. Whether we can get down to that point remains to be seen. You can see already the pivot level today has been sort of chopped up quite a bit, so I'd be looking to leave that alone, preferring a breakout of the highs that we've had, the lows just getting squeezed in. So for now, yeah, better to sort of sit on your hands, I would say, for the pound, but preferring the same sort of thing as the Euro to look to continue the sort of the recent trend to the upside, if you like. But then saying again, if you do get a trend or a break of the trend of the recent lows, then you can obviously look to see some dollar strength come back into the market. as well. Just out the corner of my eye, just look here at dollar CAD just pushing to its highest. A bit of Canadian dollar weakness. Got an interesting resistance level just about to come into play that you see here. I like the look of R1 matched up with yesterday's high. It's a potential point to get into this trade. We had a nice break of this trend line yesterday, so that's also almost where we're trading now. I think you've got two reasons I would say to look to take this trade on, or obviously the speed of the market coming up would be one to sort of put you off a bit, but just coming to those highs there, and you've got technically quite a bit of resistance in the way even before it does get to that R1 there. Aussie dollar, and then we'll come over to dollar yen to wrap up the currency pairs that we're sort of focusing on here. Pretty range bound over the last 24 hours, and you can see matched up with the R1 today and the S1, you're going to have yesterday's high and low. We even got a bit of that double top area that we had on the 10th on the Tuesday. Quite a nice range to look to play, considering the recent trend of this market. I'd be happy really to sort of look to go long or short, but perhaps if I had to make a choice, I think S1 does look slightly better with yesterday's lows pretty much right on that, to look to play the range to continue that market back up towards the pivot and even yesterday's high. We get a break through yesterday's high. If the dollar was to continue weakening, I think I do like the look of going short around here. The high that we had the sort of the back end of March 21st linked up with the R2 area today, because we are still a lot lower than where we were come the sort of the back end of January. So I think if we can get a pullback to that point, would be definitely one to be aware of. Aussie dollar, just before we go on to the Japanese yen, you can see really nice when we just transition one second just to lower down the camera, and you'll be able to see here, you can see a nice trend line that we've had from the lows. There you go, almost getting tested again here. I was looking actually to get long if we did come back down to test that trend line, but hasn't quite made it down. I know a couple of times before when it's looked like it was coming to the trend line, it goes up to only come back down again. So from that sort of trading pattern, I'll be looking to ideally look at this area as a nice place to go short, and then hopefully get a retest of that lower trend line. Just one to bear in mind for Australian dollar there. Good opportunities perhaps to play the little range that we're in today, and then maybe to continue the overall trend of this market short, a bit higher up. Dollar yen, which it did struggle actually around the S1 yesterday to push lower. I know a couple of people were looking at that market to continue through and then try and get the low of the week. Didn't quite happen just yet. R1's got some nice resistance today. The lows of yesterday and the day before, along with S1, and it's going to be an interesting support area if we were to perhaps get a continuation of this recent trend. But I would prefer, I would say, looking to go short at the R1, or using the sort of the highs of the week as well, and yesterday's. That's not yesterday, Tuesday's high, R2, good resistance area. So stuck within this range. Safer play would obviously be waiting for a breakout of it. But R1 I think does look like an interesting point for this market, and especially if we can get above this recent sort of downtrend that we're in, it wouldn't I don't think it would take too long. So you do have an opportunity there if you wanted to look for the reversal of this sort of safe haven move that we've seen. Gold, obviously on that weekly chart you can see pretty much that's to the tick, if you like, on a weekly chart, hitting the high that we had of the year. I think it was 8 ticks off at one point, and it looks like it may have just got there. So that was an important level that we broke through. You'd have some stops there, came back down, a bit of profit taking as well, looking for areas I would say to continue the trend that we've had from yesterday. I'm just going to mark up a couple of trend lines to see if they do look like they could come into play. So around about here I quite like the look of. So the highs that we had just above the R1 before the main sort of push yesterday, thanks to the man himself, Donald Trump. I would like a bit of support around here to continue that trend. I would not. Well, I don't mind the pullback sort of high that we had yesterday. If we were to come back down again, I just think, considering the time, I'd prefer looking to get into this market a bit later on. Just above the pivot, you've got the high of the overnight session, but really the key sort of areas are going to be where we found support last night to the resistance. If you're looking for continuation, you really want that whole area to go, and I think a break above the pivot might just be a bit too risky considering these levels of resistance there. Bit of a trend line coming down that's been respected all day, so I'd be focusing on that from that level just mentioned there. So if you do get a break, it could be this trade you're only really looking to take in the afternoon rather than now. Equities, I mean, they're tricky, they really are. You know, what direction are they actually going over the last few trading days? I'm not too sure, if I'm being honest. I think you're better off waiting to see what happens in the afternoon, if anything at all. Each time we sort of look to make a new high, it comes back, so something just to bear in mind there. Maybe trading too aggressively on breaks of new highs isn't the way to go here. The previous highs and previous lows of the day, so we see price getting squeezed in here for the S&P, so that could be the thing that you're really looking for. There is a breakout of that, a breakout of this mess, this range, to then maybe get a continuation either way. But do I prefer the long or short? I don't really have a bias at the moment, but that's not a problem. You know, trade what you see rather than what you think is obviously a good way to go about it, and that will sort of transgend here into the Nasdaq. Similar kind of price action with those lows just getting squeezed in, and the Dow Jones pretty similar there, more similar to the S&P. Finishing off with oil, with Ant mentioned there, really did push higher quite nicely, highest we've been for quite some time. The pivot, I guess you could say, we're sort of finding a bit of support, or found a bit of support on that with the pullback, which was yesterday's sort of R1. Decent area of support around this price point here. I think, you know, all things considered, we're not going to get the biggest move in the market right now, and again, same with gold and equities. Probably better just to wait for later on to get this move. Wait for the sort of the 2 p.m. increase in volume. It could be a little break of this downward trend from this morning. Is the trade that you're looking to take onto into the afternoon. So I think for oil, gold, and equities, better to sort of wait until the sort of second part of this day. Dollar CAD just finding a bit of resistance up at that level, and the ruble coming off its highs on the R1. Have a quick look over the FTSE just to wrap things up. There's just quite my corner of my eye just coming up to the highs again, and the FTSE has been on a decent little run, you've got to say, since the back end of March there, and coming to interesting resistance points. Really important, I think, if we can close above the sort of the March 11th, March 9th, or whatever it is, middle of the March highs. If we can close above there for the end of the week, it would be a big sort of play for the FTSE, and we can look to maybe take back a bit more of this big move to the downside that we saw from early Feb, and then into, well, the back end of March as well. Any questions, please do get them in the chat, and I'm completely free today, so it'll be good to catch up with a few of you as well. So have a good trading day, and I'll catch you later on.